Hi everybody, welcome to a new episode of Reinvent That Money. That's how we call the show as of today. This is the show where we talk about Bitcoin, of course, and other cryptocurrencies and several other monetary innovations. My name is Paul Buitink, and my co-hosts today are Job Hartog of blocktrail.com and Tim Pastor of twoway.io. Our guest today is the one and only Trace Mayer. We had him on 6 months ago as well. Welcome, Trace.
Hey, good to be here.
For people that don't know Trace, Trace is a seasoned investor. He's invested in Armory, BitPay, Kraken, and many other firms. He also runs a podcast show on Bitcoin.kn, and you can follow him on Twitter at Trace Mayer. So Trace, the main topic for this episode is the question: why do you hire Bitcoin? So you can see Bitcoin as something you need to have a job done. You have a problem and you want to hire someone, you hire Bitcoin. So what is the problem that someone needs to have solved, and why do you use Bitcoin for that? So could you elaborate on why this is such an important question in the space right now?
Yeah, I think it's an absolutely critical question, and a lot of people are really losing sight of the business application. See, we're under threat. Uh, Major financial institutions have come out with patents. Coinbase just said that they're coming out with 9 patents. Challenging a patent costs hundreds of thousands of dollars. Running a compliant Bitcoin exchange with AML and KYC, that costs hundreds of thousands of dollars a year. Uh, are we just building science projects, or are we going to have a sustainable business model where we're going to be able to defend ourselves against patent lawsuits, against compliance costs, all of this stuff? And so at the core of all of this is, why do people hire Bitcoin? What job do they need done, and we're able to do it, either with Bitcoin or with our startups? And I think that that's just a critical central question that should undergird and overarch all of the other discussions we have. Whether it's the block size discussion, whether it's any changes to the core protocol, whatever it is that we want to change, we need to figure out, why do we hire Bitcoin, and how can we make Bitcoin more useful and more valuable to the people that hire it. And I don't just mean people using Bitcoin, I mean people hiring Bitcoin. And hiring Bitcoin, we need to figure out who's willing to pay money. And we need to go after the people who are willing to pay the most money with the highest margins. Those are the types of customers that we want when we're hiring Bitcoin. We don't necessarily want people just using Bitcoin to make a bunch of de minimis economic transactions and not be willing to pay anything for it. We need people who are really willing to pay a lot of money to hire Bitcoin. And then we're going to have the resources to defend ourselves, to build out the startups, to build out the technology and all that stuff. Because otherwise, guess what? We've been in a 2-year bear market. People are getting laid off. We're going to have more people getting laid off. The community is going to shrink. We're obviously not doing the job very well. We either haven't figured out what the job is, or we're just not doing the job that
Right.
people hire Bitcoin for. Because if we were doing the job, then the price would be going up, people would be getting hired, startups would be getting funded, etc.
Yeah, because of course the question can be answered in so many different ways, right? You probably hire Bitcoin for different reasons than I do, and so everyone has his own use case for Bitcoin. So how would you address that problem that Bitcoin has so many different use cases, and it's difficult to converge all these different types of scenarios and use cases?
Well, I think that's a great way to approach it. I talk often about how Bitcoin has 7 different distinct network effects, all taking place at the same time. The first network effect is speculators. The second would be merchants that accept Bitcoin because speculators have Bitcoin. That's why I invested in Armory, because you have to have a wallet service in order to hold the Bitcoins in order to speculate. Then I invested in Kraken, because you need to have an exchange in order to speculate on the price between Bitcoins and euros or dollars or whatever. Then I invested in BitPay because, hey, a merchant processor making Bitcoin easier to use. But that's the second network effect. So I would argue that the wallet or the exchange, that network effect is more important to focus on than the merchant processing network effect because it's the first and not the second network effect. Then the third network effect would be consumers who use Bitcoin solely because merchants accept it. And I think a good example of this is Purse.io, where you can order stuff on Amazon, get a 20% discount solely because you're using Bitcoin as the medium of exchange there. Because of that increased demand, you have miners that are securing the network because the block reward has a higher value in fiat currency terms. That's the fourth network effect. So then we have the most secure blockchain. Because it's the most secure blockchain, we're going to get more developers and more startups and more people building on top of our protocol instead of other protocols that are out there. That will lead to the sixth network effect of financialization. And we're seeing that already with companies like LedgerX and SolidX, which are doing Bitcoin derivatives and swaps. And then the seventh network effect would be world reserve currency status. That's where people are actually settling into Bitcoin instead of just settling into dollars or euros. And so those are our 7 network effects right there. And yeah, we have different use cases in each of the network effects, but I think we need to prioritize the earlier network effects to the later ones because they're the much more foundational network effects.
Earlier on you said we need to target people with the most money. Obviously that is, I guess, Wall Street in this case. They're already investing heavily in Bitcoin or blockchain technology. Do you think that's a good group to focus on then?
Not necessarily, because we've got 2 different branches there. We've got financialization, which is the 6th network effect, and world reserve currency status, which is the 7th network effect. But I don't necessarily think world reserve currency status will happen for a decade or 2 at the very earliest. When it comes to financialization, well, Wall Street and everybody, they can use blockchain technology without using Bitcoin. And it doesn't necessarily even mean that they'll actually pay to use Bitcoin for those particular services anyways, because they're using it to cut costs, not to increase them. And so, when we're looking at who are the people who are willing to really pay a lot of money to use Bitcoin, I would say that it's primarily monetary sovereignty. Is the people who are looking for monetary sovereignty, who are willing to pay for that.
Yeah, those are a very small group, of course. That's you, that's me. That's still very limited.
No, I don't think it's a very small group, because we've got people on the border of Venezuela that are moving millions of dollars worth of bolivars through Bitcoin. I was talking to somebody, there's an exchange in Switzerland that, because of FACTA, is actually the largest Bitcoin exchange in the world in terms of volume, doing more volume than all the other Bitcoin exchanges combined, but they're all doing it off the radar, and it's because they don't want to attract the attention from FATCA. And
so the world has been plagued by monetary crisis now for so long, and especially over the past few years, we don't see that easing or any. There are just so many different situations across the world where people need monetary sovereignty, but at the same time, we don't see the Bitcoin price rising. So how come we don't see yet an influx of wallet money going into Bitcoin?
Well, I think there's uncertainty. Take the block size debate, for example. Becoming very public, being made a spectacle of. I had a friend who was on Bloomberg discussing it. It's shaking confidence in Bitcoin, and at the heart of it, is part of this discussion why we're hiring Bitcoin. For example, I was having dinner with Dr. Adam Back, Gavin Andreessen, and Greg Maxwell, just the 4 of us. It was like a 5-hour dinner. It took a long time. And, I brought this point up. I'm like, why do we hire Bitcoin? And both Greg Maxwell and Adam Back are like, well, we hire it for monetary sovereignty. And Gavin said, well, because when I make a payment, I feel good. I mean, does that really cut it? How much are you willing to pay to make a payment in order to feel good? Is kind of the question to ask. Because do we want somebody moving $1 million of value into it because it's not safe in Greece or Venezuela or Argentina, or do we want to go after a bunch of people who want to play around with a faucet or play around with Satoshi dice or some other de minimis economic transaction where they're not actually moving a lot of money into Bitcoin? Like, right. Which one is going to actually have more of an economic effect? Which one is going to provide, so that helps frame the debate. Like, why do we want to increase the block size? Well, I think it would be great to increase the block size if we had, for example, confidential transactions getting rolled out. Why? Because confidential transactions will increase the value proposition that people using Bitcoin for monetary sovereignty want. You
Can
know,
you explain what confidential transactions are?
so confidential transactions is an invention by Dr. Adam Back and Gregory Maxwell, where it uses homomorphic encryption and zero-knowledge proofs to encrypt the amounts and the addresses that are used in Bitcoin transactions. So now, instead of the blockchain being in plain text, it's actually in ciphertext. And so that means that you can either have a transaction have the amounts and the receiver or the sender, you can have that either public or not. If it's not public, or if it is encrypted, then you've now cut the audit trail. So you can't just trace back all the transactions. You know, Ross Ulbricht, for example, life in prison for running Silk Road. Do you think he feels warm and fuzzy because of all the Bitcoin transactions he engaged in? That's just one particular use case, but it shows that, just because Gavin feels warm and fuzzy because he makes Bitcoin transactions, there are potentially a whole nother market with lots of other actors who don't feel warm and fuzzy when they make Bitcoin transactions. For example,
so to summarize, can you then what is your position in the whole scalability debate?
Well,
your concrete or actionable position.
Right. Well, I think we have to figure out, why do we hire Bitcoin? And confidential transactions, because of the proof, those types of transactions take 7, 8, 10 times as much block size space as a regular transaction does. So yeah, we would probably need to increase the block size, but we don't just need to increase the block size so that people can make more faucet transactions. We need to increase the block size for people who are willing to hire Bitcoin and pay money, for a real good or service. And I think confidential transactions is a good or service that people are willing to pay for. In fact, I bet they're willing to pay a lot of money for it. And we could very well see a huge increase in the Bitcoin price because of that, because people's transactions would be much more private, Bitcoin would be much more fungible. All of those things would be very positive for the Bitcoin price.
And how easy is that to implement?
Dr. Back said it could actually be implemented as a soft fork, which helps us understand, like, why are we debating this block size issue when we could have the smartest people in Bitcoin working on implementing confidential transactions? In fact, he said that it would be implemented already, but for this massive distraction of the block size increase. I was on a call with over 70 CEOs at Bitcoin companies where they were talking about this block size increase. I figure that call cost our industry $300,000 at an absolute minimum. How many millions and millions of dollars have we spent on this block size issue? And is it really something that people are willing to pay us for? I mean, that's the question. Confidential transactions? Yeah, I think people would pay us for that. But like increasing the block size to make faucet transactions? I don't think people are going to pay us for that. And so, people who are on those calls, they might be getting laid off pretty soon, because that's not a very wise use of resources to just be debating something that customers aren't willing to pay for. I mean, it's a hard reality, especially for people that want to work on science projects, because that's more fun. But at the end of the day, we have to deliver goods or services that people are willing to hire to do a job. And they're willing to pay for.
Isn't it also like a classical ownership problem? Because normally, as a businessman, if you have a business and you notice that demand is lacking, or there's something wrong, you can pivot your model. You can change a thing here or there. But with Bitcoin, you build your services on top of this protocol that you do not own directly yourself. So it's very difficult to steer the future of the protocol you depend your business on.
Well, and that's where I think like I had a discussion between Dr. Back and Gavin Andreessen on my podcast, and Gavin had made a comment about, well, maybe we need to fire all the core developers. And I retorted with, but Blockstream has raised $21 million, and how much money has Gavin raised to fund this development? And at the end of the day, it's the people who have the money and who are delivering products and goods and services that the market is willing to pay for that are going to have the resources to build out the code. And so you can have an opinion about the code, but if you don't actually have the financial resources to build it out, then your opinion doesn't mean jack. And not only do you have to build out the code, but then you have to have the mining power to actually get it implemented. And if you don't have the financial resources to have the mining power, well, guess what? Then you're just not a player when it comes to a lot of this stuff. And so, you know, it really begs the question, like, why would we want to be having these debates with people or including people in the process that aren't necessarily players, that don't necessarily have the financial resources to make a difference? You know, and yeah, it is an open source project, but at the end of the day, so is Linux and Red Hat and, you know, a lot of these things, and they have ways of going about getting decision-making process done, and a lot of it has to do with who has the money.
Mm-hmm. But apart from all the use cases which we're discussing right now, where it comes to Bitcoin, when you look at the graphs, at the statistics, when you look at the all-time amount of transactions that's being done, you can see an exponential growth of transactions. So at some point we will either need an increase in the block size, or we will need something like the Lightning Network or sidechains or some solution, because preferably I think most people don't want to move it off the chain. They would like to keep it on the chain, decentralized, preferably handled by Nakamoto consensus or in any other way that can be verified in a public way. So don't you think it's necessary for us to look for this solution anyhow for any kind of Bitcoin business to be doing business in the future?
Yeah, I think the Lightning Network, for example, is vital for Bitcoin scalability, because that'll actually increase scalability and not just throughput. Increasing the block size only increases throughput, and it actually could decrease scalability, particularly when it comes to validating transactions or things like that. So I mean, yeah, we have to look at solutions that scale as opposed to just increased throughput. But also, who's going to build out the Lightning Network? You know, that's complicated stuff that's expensive. Who's going to build that out? I mean, Blockstream has Rusty Russell, a Linux kernel developer, building it, but who else is building it? I mean, a lot of people have opinions, but like, who's actually building it? Who's putting their money where their mouth is what I'm interested in. Another thing that's interesting to look at is, you know, not looking at a chart not just of transactions, but of transaction fees normalized to US dollars, and then comparing that chart to the market cap of Bitcoin. And you know what? The market cap of Bitcoin follows almost exactly how much people are willing to spend on transaction fees. So the conclusion we can draw from that is the more people are willing to spend on transaction fees, the higher market cap Bitcoin is going to have. Because then we get to see who's actually willing to pay to use it. Because they have to pay money to a miner that they don't necessarily know who's going to get it. You know, so that's a hard cost that people incur using the Bitcoin network. I think it's great to see more hard costs from using the network, because then we're able to filter out who the real users are because they're willing to pay money to use it.
Yeah. So what
That's
about
a very interesting point there you got there, Trace. Maybe we finally see all those transaction spammers that are around finally quitting off, like if we have a transaction fee.
Well, it'd be too expensive.
Yeah,
yeah.
exactly.
I the whole concept of like a transaction spammer, I don't know that I really even like that. I mean, at the end of the day, a transaction is a transaction. They're all valid. So, you know, if somebody is quote unquote spamming, well, just make it more expensive for them.
Yeah.
You know, and then the value that they derive from spamming a bunch of transactions, they're just not willing to pay for that, or it's not financially sustainable for them anymore. I mean, that's a very simple solution. I mean, we don't look at like Uber spammers, right? Like, because people are paying for rides. I mean, if we just hired all the Uber cars and had them drive around completely empty, not having any actual economic value taking place, but if people still had to pay for it, well, guess what? An attack on the Uber network would only last so long before whoever was attacking it decided, you know what, I don't derive the value, I don't feel good anymore from you know, having all these Uber transactions happening. So, you know, I think it's very important. We need to look at the transaction fees in dollars and look at our market cap, and it shows us who's willing to pay for Bitcoin and how much they're willing to pay for it. And at the end of the day, he who has the gold makes the rules. He who has the private keys makes the rules. I mean, this is a very long-standing premise, especially in Austrian economics, that we need to focus on the customer and the subjective value theory. You know, the reason people value stuff. And the way that we can discern that is through the pricing mechanism, and it enables us to perform economic calculation. It enables us to determine what needs to get built and what doesn't. Which science projects should get funded and which ones shouldn't. Who needs to get laid off and who doesn't.
Yeah. So how can we go from here? Because we had Scaling Bitcoin in Montreal. Maybe can you wrap up or summarize what the conclusions were there, and what's the next step?
I thought there were a lot of very good proposals and discussion that was happening, but at the end of the day, it was a lot of tail chasing. And I don't even know that I mean, maybe they'll come up. I think it was they were looking over a bunch of ideas, and then in Hong Kong in December they're going to hopefully have some hard proposals to implement. But at the end of the day, I don't even know that it necessarily needs to happen. We need to figure out how much people are willing to pay to use Bitcoin first before we allocate all the resources on this type of stuff. I mean, there were over 400 people there from many of the top companies, a lot of really smart devs. I mean, that conference over the weekend, when you look at the billable hours, it costs our industry millions and millions of dollars to discuss this issue. And I don't even know that this issue needs to be discussed right now. I mean, are people willing to pay millions and millions of dollars to use Bitcoin? I mean, if they're whining about paying a fraction of a penny for a transaction, as opposed to paying a whole penny for a transaction, I mean.
What are you going to do to further your mission? Are you going to campaign? Are you going to how are you going to make people aware of your goal of trying to make the Bitcoin network more profitable and focus on users that are willing to pay?
Well, we need to figure out what people hire Bitcoin for. You know, I think that's the important question, and then we need to hone in on those customers that are willing to pay a lot of money to hire Bitcoin. And then we need to focus on delivering the good or the service that those particular customers are after.
So are you using your investments, your startups to answer that question? Are you going to do surveys? Are you going to have sessions with customers to better understand why they're hiring Bitcoin?
Well, I mean, with most of my startups, we already have customers that are paying money. So we're serving those customers according to what they hire us to do. You know, we aren't just working on science projects. We're working on paying customer work, and so you know, hopefully we'll be able to find more customers that want to pay us more money, and then we can hire more people. And if we lose customers, then we'll have to lay off people. That's just the nature of how it works. You know, there's not an unlimited amount of money, and nobody's just got a God-given right to venture capital. And I think that the Bitcoin space in general has been overly coddled with venture capital money. And I think that we're going to see the venture capital money going to much more established entrepreneurs like Chain.com and Itbit and Coinbase, and the smaller startups and stuff. I don't know that they're going to keep getting funded, because at the end of the day, they're just not really delivering the return on investment that the venture capitalists need in order to justify the investments.
Yeah, and the best funded firm, I think, still is 21 Inc. What do you think of their product?
I haven't researched their little computer enough to really make an assessment of it. It's cute though. It's very cute.
You're kind of a mining expert. What do you think of their proposition?
Oh man, I love to try it, but $400 for Raspberry Pi, come on, I gotta look into it. But the software that they put in there and the claim what they made on the software, I would really love to try that software. So maybe in the end it will even result in me buying $400 just to play with the software.
Yeah, I mean, maybe it'd be a fun thing to play with. I think that we should be much more skeptical of what the intentions might be, because if they can acquire a huge amount of hashing power through consumer devices that they ship out that all come and mine on their pool, and then they're also able to buy or acquire through a small amount incremental hashing power from other pools, then they could take control of or acquire Bitcoin for a fairly small amount of money relative to the total market cap. So, at the end of the day, he who has the gold makes the rules, and it wouldn't surprise me if you could actually take control of a large majority of the hashing power with $100 million. And so, and hey, then you've got control of Bitcoin. One hash is one hash. Nobody has a God-given right to have a transaction appear in the blockchain. Nobody has a God-given right to use Bitcoin. So, you're going to have to be able to pay for it. And I think we're going to increasingly be moving into that type of a space. There's so much increased competition from Wall Street and in Silicon Valley that we're going to have to increasingly have the financial resources to hang on to our toy.
Yeah, but that's also one of the few things that I don't really understand about why people are cheering at 21 for decentralizing Bitcoin further, because I believe, correct me if I'm wrong, but I believe that they will collect 75% of the mining rewards from each device. And if they want to do that, they probably, well, that's what I assume, they probably have to do that through a mining pool. So that will only increase centralization further. So
yeah,
I'm wrong, but I don't see how it helps decentralization. It's the opposite, in my opinion.
Yeah, because it's not necessarily the decentralization of the mining power, it's who controls what that mining power is directed towards.
Exactly.
So sure, if they got millions of devices out there, but they're all mining on their pool, then they get to control how that hashing power is used. So yeah, I mean, it could be a great play on actually acquiring or co-opting Bitcoin.
Yeah.
Can we call it a distributed pool then?
No, because it's not a distributed pool.
No, of course not.
I mean, we already have a distributed pool that people can mine on if they want to.
A peer-to-peer pool, right? You mentioning?
Yeah, and they're not directing the hashing power there, are they?
No.
Let's, Job, you have something cool to share with us. Blocktrail recently launched a new wallet.
Yeah,
so talking about real solutions for users. Are people going to pay for it, or?
No, obviously not. It's a wallet, so people are not going to pay for it. There are a few things where we focused on with this wallet. Basically, you always be the owner of your coin, so it's not like a banking wallet, like what the Coinbase is and all the other ones are doing. Tim is showing it right now on camera. Nice. And the second big thing that we build in there is that once you verify your wallet against your phone number, you will actually be able to send Bitcoins directly to your contacts in your telephone without the hassle of putting in QR codes or whatever other way. You can just click to people, send the Bitcoins, and they will arrive directly. I actually tried it last Friday with one of my mates. He runs a cafeteria. I don't know what the correct English word is. Cafeteria, snack bar around here. And I still needed to pay for my fries, so I just, hey, you're my friend. Here's your phone number. Download the wallet, click, send Bitcoins, and you receive his Bitcoins instantly. So that's actually pretty awesome to see that it works so fast. Yeah. And the other night, my girlfriend was just downloading the wallet to try it from, hey, let's use my boyfriend's wallet. And she put a photo on Twitter from, oh, my wallet is empty, I have no transactions. And of course, I got a phone number, so I just pressed the button, phone number, send Bitcoins, and the wallet got loaded. So that's solving like one of the issues we still see open with wallets. And then, again, Bitcoin, own your own money, be in control. That's really what a wallet all is about.
Yeah. Monetary sovereignty.
Exactly.
Was it difficult to get it approved by Apple and Android? Google?
Not difficult to get approved, but there are some countries that limit actually how do you say it, encryption on your phone. So we are not available in some countries with our Apple Wallet, and China is one of them, because they don't allow encryption to take place in the app itself.
Right. Interesting.
So that actually that triggered me a few questions to study on some other apps in the Chinese App Store to see what's going on in there. But that got me away.
Does that mean that any Bitcoin wallet that's being allowed in China, that you shouldn't use that?
Well, that's basically what triggered my question mark from, hey, if there are Bitcoin wallets that say they do signing in the app and they are in the App Store in China, what's up with that? You know, I don't know what's up, but it certainly it rings an explanation mark. It rings a mark. I got to check it out later, but we're just busy rounding up. We just released all the open source code yesterday of it, so people can actually check how we do the security and that we are secure, because that's one of the most important things you have to do as a wallet, we think. So
nice. To address Trey's earlier concerns about we need to be able to keep on paying for our staff. We need to make sure that the machine keeps on churning. So what is the business model behind this wallet or behind some of the other services then with Blocktrail?
Behind the wallet, right as it is right now, there is no monetization in that. But we will launch extra features in the upcoming month or 2 months that will show some monetization options. And that will be directly buying and selling from the app in the Netherlands and probably in the rest of Europe as well within a month or 2. So that's what we're finishing up right now.
Right.
But that's the big thing where we are aiming on, is keeping control of your Bitcoins, especially for all those guys in Greece. We think that's the big thing why people will come into Bitcoin in the upcoming year, with more countries coming up with having currency problems, and
that's what you expect. But I was a bit disappointed by. I mean, Greece was such a big issue, but it didn't really lead to. Of course, there it's so small still, and it's not a country known for its adoption of technology and all of that. But I was a bit surprised about the slow uptake there, and also I would have expected a bigger impact on the price itself. What's your take on that?
I agree with you there, but I think China was even bigger the week afterwards. There, people do realize that they need to own their own stuff to be able in control. They are more on that street than the Greeks are. But yeah, well, I don't have a clear vision on China, so.
Yeah, I mean, I think a lot of the people in Greece that were impacted, they aren't necessarily the smartest pencils in the drawer, right? Like the people that were most likely to be affected were the least likely to actually uptake Bitcoin. And the people who were already Bitcoin users, they were smart enough to not have any money in the Greek banks, because everybody and their dog could see that coming from a couple years away. So I think we probably already saw people in Greece move into Bitcoin far before the Greek crisis actually happened. And I do agree that I think China is even a bigger mess, but the Chinese they already have a 5 IQ point average higher than the US, for example, so they're already a little bit smarter.
Yeah. And maybe before we wrap up, Trace, what do you think of this R3 announcement the other day, where 9 banks have decided to join forces and collectively study or invest in blockchain technology? Is that positive, or how do you see that news?
Well, I mean, I think it's very positive for the blockchain industry. I don't know whether the banks are going to decide to go with Bitcoin or not, although they probably will, because they should take advantage of all the open source development that's happened, just like they take advantage of the internet. And they still run their own intranets, and they can run their own intranets with sidechains and have permission blockchains and everything that they need. I also agree with the chief information officer at NASDAQ at the Consensus Conference in New York. He said that there are going to be lots of players that are going to waste millions and millions of dollars exploring their own thing and not get anywhere, and they're not going to be able to overcome the network effects, just like, and he had been the chief information officer at eBay, and he said Yahoo had come at eBay and they couldn't even overcome the two network effects that eBay had, and they wasted millions and millions of dollars trying it, and so did a lot of other players. And so, I think
but
the
banks together have a much bigger network effect than Bitcoin itself, right? The
no,
banks
not
together,
not
the
no,
number
not
of users, the
No.
9 banks, the users they
no.
have, it's
I,
a multiple of what Bitcoin has, of course.
Yeah,
So,
but I think we should keep in mind the banks are dying dinosaurs and they're zombies. They had to get bailed out. But if you take the market cap of Goldman Sachs, Morgan Stanley, JP Morgan Chase, Deutsche Bank, Barclays, and you add it all together, their market cap combined is smaller than Google's market cap. And so the big banks, not only are they zombies and haven't innovated for 30 years and are giant bureaucracies that are protected by regulation and extremely slow, but now they've got the tech companies, Google and Apple chiefly, that have trained their howitzers on their industry, and they're going to obliterate the big banks. They're going to unbundle them. They're going to go after their most profitable customers. The tech companies are going to obliterate the
and
banks.
we see it already with Apple Pay, of course, as just an example.
Oh, just getting started, Apple Pay and Google Wallet. But the tech companies, these big banks are going to have to become tech companies is what's going to happen. And Goldman Sachs is, they're ahead of the curve. Over a third of their employees are tech employees, interestingly, and they've invested $50 million in this Circle deal. But the big banks are going to have to become tech companies. And I think that Silicon Valley and the tech companies are a lot better at being tech companies than the banks are.
Yeah.
And they're a lot better at innovating, too.
Interesting. Yeah.
Cool. You guys, any remaining questions for Trace before we conclude?
Just one more I'd like to ask. Recently, you was regulator, I believe it was the CFTC, Commodity Futures Trading Commission, if I'm correct. They placed Bitcoin under commodities. Some countries see it as a currency. How do you see it, and what do you think of this move?
Well, I don't think we've actually seen any countries that have classified it as a currency in terms of legal tender status. And that's, under the Uniform Commercial Code in the U.S., in order to get the protections against, say, encumberments in a bankruptcy, it has to be legal tender. Otherwise, it can get clawed back being property. I think that classifying it as a commodity or a digital commodity is probably the way it should be classified. And then the other regulators should be looking at how it's being used by particular individuals or businesses to then apply other regulations, whether that's money transmission or whatever. And so that actually appears to be kind of how the U.S. is approaching it. The CFTC, it's a commodity, FinCEN. If you're doing money transmission as an exchanger or versus an issuer versus an administrator in their guidance, but I mean, at the end of the day, it is a new technology. It is not defined in any of the law and the statutes. There is political speech and religious speech that is embedded in the blockchain. The U.S. Supreme Court has already upheld cryptography as protected speech in the crypto wars cases in the mid-90s, and so I don't know that it is good for anybody to have any significant constitutional challenges happen, because that could just really bog down and increase the uncertainty for the industry. But at the same time, that potential is there for any particular individuals that decide they want to flex their rights, and man, it could get really interesting because it would cut at the very heart of a lot of the major constitutional principles, and so I think there are a lot of constitutional challenges that could come about to a lot of these, whether it's guidance or interpretations or whatever. I mean, FinCEN, for example, they haven't followed their own administrative rulemaking. So even their guidance, it could be challenged as having not gone through the proper rulemaking procedure with all the attendant due process of law that's required to accomplish that. But is that helpful for the industry, or is it just going to create more uncertainty? And meanwhile, you got jurisdictions like the Isle of Man, which have gone through their parliament and signed off by their prime minister both the Proceeds of Crime Act and the Designated Businesses Act, which goes into effect later in October. And so they're rolling out the red carpet for this industry and removing any of the legal uncertainty, and they're not throwing the entrepreneurs in jail, which I think is helpful. Although to give the regulators in the U.S. their due share, I do think that they've targeted mainly very egregious actors, and those are the ones that they've gone after. Whether it's Albrecht or Charlie Shrem or let's see, the guys running like the credit card hacking scam and the Bitcoin exchange, so they've gone after the much more egregious actors, which I think is, if they're going to slay dragons, at least slay the real dragons, the guys that have been doing, the very egregious stuff, and not just the entrepreneurs that are just trying to, do stuff, but do it in a compliant way where they have chief compliance officers, etc.
So when you look at, for example, BitLicense in the state of New York, do you think that other states in the U.S. now have a really big comparative advantage over the state of New York? Do you think that Silicon Valley, for example, now has a really big comparative advantage over New York?
Yeah, I think Texas has a huge comparative advantage over New York. Because the bit license is bad news. It's expensive, hundreds of pages for the application. Just leave. It's not like the New York market is that big to serve, and it's going to get served anyways by people who don't comply with the bit license, and they're going to get a charge more in order to do it because it's not a legal sanctioned activity. But what they charge, even though they charge more, it's going to be less than what the actual legal businesses would have to charge in order to cover the compliance costs. So, it's very ironic. Like, the bit license is going to drive out all the legitimate businesses, bring in the illegitimate businesses, and then I think you'll have a very few number of legitimate businesses like Circle and ItBit that are going to be able to operate, and then the banks, of course. But when the tech companies decide that it's time to just eat the banks, they're going to be able to pay for any of this regulation and license stuff that they need to, or they'll just buy the banks. Apple's got more cash on their balance sheet. They could buy Deutsche Bank, Goldman Sachs, and Morgan Stanley just with the cash on their balance sheet. The big banks are really kind of pygmies compared to the tech companies. So we should keep that in mind.
I think Groupon deal for Apple.
Yeah, well, Groupon's a joke.
We as Europeans would love to sell the Deutsche Bank, so if anybody's...
well, that's the problem. You don't know what you're buying.
German companies are on sale, of course, now. So.
Yeah, same with South American companies. Buy companies in Chile and Brazil right now. They're a good deal.
Yeah. Well, thanks so much again, Trace. Anything else you want to add?
No, I think it's been a great discussion, and I think we need to keep our eye on the prize. Like, why do people hire Bitcoin? And we need to do that job the best that we possibly can versus any competitors. In terms of monetary sovereignty, yeah, Bitcoin in a lot of ways is superior to gold even, because you can transfer it over a communications channel, and you don't actually have something physical that can be seized. So why not increase the value proposition that it offers with something like confidential transactions, so that Bitcoin transactions would no longer have smell like they currently do, where you're able to just track them all through the blockchain. If we remove that smell, guess what? Bitcoin becomes so much more attractive for people wanting to use it for monetary sovereignty purposes.
That's a nice title for the show. Then let's remove Bitcoin smell. I like that. Okay. Well, thanks, Trace. And people can find you on Twitter @TraceMayer and bitcoin.kn, right?
Yep. www.bitcoin.kn. Thanks, Paul.
Let's talk in 6 months. Thanks, guys. Bye.